Dirty dealings, corporate battles, consumer woes. This is Evening 5. Capital A announced that Bursa Malaysia has approved its EGM circular detailing the proposed disposal of its aviation business to sister company AAX. According to the company's statement, an EGM will be held within the next 3 weeks for shareholders to vote on the proposal. If approved, the proposal will proceed to the court for approval of the proposed distribution to shareholders via capital reduction. Similarly, AAX announced that it has obtained clearance from the stock exchange regulator for its EGM circular for shareholders related to the proposed acquisition. AAX's EGM is expected to convene in about 3 weeks, with the exact date to be announced soon. Capital A CEO Tan Sri Tony Fernandez said that the group is beyond excited about the next step of the aviation transformation with the birth of the new AirAsia Group, which he says will deliver increased profitability and returns for the shareholders. AAX Chairman Datuk Fahmat Lee said by integrating AirAsia X's extensive network with AAX's medium haul capabilities, they are set to unlock significant synergies that will not only streamline the airline's operations, but are projected to increase revenue and reduce operating costs. Capital A's aviation business disposal to AAX will help it to address its debt-heavy balance sheet as part of efforts to exit the PN17 status it had entered in 2020. In a separate filing, Capital A said its wholly owned Asia Digital Engineering will operate a landing gear maintenance, repair and overhaul or MRO facility. The MRO facility will be jointly owned and operated by ADE and PT Garuda Maintenance Facility AeroAsia, a subsidiary of PT Garuda Indonesia Persero. Both parties have signed a conditional term sheet on the proposed investment for the facility. Pressmetal Aluminium Holdings has teamed up with 3 Indonesian companies to operate an alumina refinery plant in West Kalimantan, Indonesia. The plant is expected to have an annual production capacity of 1 to 1.2 million tons under the first phase, with a potential expansion to double this output. The total cost for phase 1 is $750 million or 3.24 billion ringgit, to be funded via equity and loans. Pressmetal, Southeast Asia's largest aluminum smelter, said the 3 Indonesian companies are PT Alkasa Alumina Refinery, PT Dinamika Sejahtera Mandiri, and PT Kalimantan Alumina Nusantara. KAN will establish and operate an integrated alumina refinery plant, power plant, jetty and supporting infrastructure in Sanggau. Pressmetal will subscribe for an 80% equity interest in KAN for 1.04 billion ringgit, executed in 7 tranches over the next year and funded through internally generated funds. AAR will subscribe for a 19.77% stake in KAN, while DSM will take up the remaining 0.23%. Pressmetal CEO Tan Sri Paul Koon said the project represents a unique opportunity to drive sustainable long-term growth. In addition, Koon said the venture is an effective approach to ensuring higher self-sufficiency and a stable supply of its alumina needs, which are critical to its core smelting operations. The Malaysian Anti-Corruption Commission on Wednesday said that Tan Sri Mokhzani Mahathir and his brother Mirzan Mahathir have declared their assets to the Commission under the latest deadline. According to MACC Chief Commissioner Tan Sri Azambaki, said investigations on the declared assets have already begun, and investigators are currently in communications with the duo's lawyers for further coordination. MACC had given the 2 sons of former PM Tun Dr. Mahathir Mohamad a final 1-month extension to declare their assets in August, following at least 3 prior extensions. Mokhzani and Mirzan had asked for more time, as MACC had demanded information on all movable and immovable assets in their possession, stretching back to 1981 when their father first became Malaysia's Prime Minister. Both of them were called up for questioning by the MACC in January, although it was not clear then what the investigation was about. Azam later confirmed that it was Mahathir who was the subject of the MACC investigation, and that orders issued to his sons to declare their assets were related to it. Mahathir claimed that the MACC had accused him of abusing power for personal gain. In May, Mokhzani stepped down as the non-executive chairman of MACC, effective from June 30th, after 15 years sitting on the board of the company. His elder brother Mirzan is currently the substantial shareholder and managing director of Betamac. He is also currently founder and CEO of alternative investment firm Crescent Capital. EcoWorld International has maintained its target of 500 million ringgit dividend payouts for the financial years FY 2024 and FY 2025. Of that promise, EWI has already paid out 144 million ringgit or 6 cents per share in July 2024. This as it posted a narrow net loss of 8.19 million for the third quarter compared to 12.3 million a year earlier. The quarter also marked EWI's first with zero revenue compared with 31.17 million a year ago as it halted new launches and prioritized sales of completed inventory. No dividend was proposed for the quarter. The reduced losses were attributed to improved results from joint ventures with Ballamore Group, lower marketing expenses, and the absence of interest costs due to full loan repayment in the previous year. Sales in the first 10 months stood at 501 million ringgit, and its share of value in unsold completed stocks has been reduced to 240 million ringgit according to EWI. CEO Datuk Teo Leong Seng said the group is on the lookout for better market conditions before undertaking new projects, citing lagging real estate price recovery in London compared with the rise in construction costs. Teo explained that as the current high interest rate increases rental yield expectation of commercial units, the group is focusing on leasing them to commercial tenants. Dato' Alan Goh Huan Hua and companies allegedly linked to him have been denied a stay from disclosing their bank account statements to 15 investors who are suing the MyAirline co-founder and the companies. Judicial Commissioner Leong Huai Huang ruled on Tuesday that there were no special circumstances raised by Go, iServe Online Mall, and QA Smart Partnership that warranted a stay from disclosing the banking documents. According to the investors' lawyer Rajesh Nagarajan, the documents are to be disclosed by the defendants by September 26. Earlier on August 12, the court had granted the plaintiff's discovery application for the said documents. Go, along with the two companies, are appealing this decision and applied for a stay of execution over the High Court's decision. Besides Go and the companies, the investors are also suing two other companies, Bright Moon Ventures and Trillion Cove Holdings. Go is a shareholder of ISOM and a director and shareholder of TCH. The matter is set to go for trial in October and December this year. The investors are suing Go and the companies for alleged failure to pay monthly redemption value sums and financing returns on the investors' outlay of about 8 million ringgit. They noted the payments to them stopped in November 2021, around the time Bank Negara had raided ISOM, TCH and other companies and subsequently froze their bank accounts.